And thank you very much for joining me here today. I appreciate it. I'm Don Ma. Let's talk about China as a place for your investments. If you remember, just a few years ago, China was one of the best places to put your money because of how much growth potential the country had. But now, just a few years later, things are very different. It seems like investors of all kinds are losing confidence in China. And this is as the country slipped into the alternative investment category. Now, this is a downgrade. Data reveals that people are pulling their money out of the world's second largest economy. Exposure to Chinese stocks in December last year was down. Now, alternative investments are typically outside traditional stocks and often are riskier. This has been evident from global capital flow trends. A recent study of public pension and wealth funds managers found that not a single one had a positive outlook for China's economy or saw higher relative returns there. Meanwhile, America's oldest president, Joe Biden, is trying to get young voters' attention by taking his re-election campaign to TikTok, which is a Chinese-owned social media platform. President Joe Biden's campaign used the Super Bowl to kick off its new TikTok account ahead of the November election. Now, the launch on TikTok comes as the app's Chinese-based owner, ByteDance, is under review for potential national security concerns. Although Biden's campaign said its TikTok account was separate from ongoing security reviews. And candidates in Indonesia's presidential election have gravitated towards TikTok as well, as they try to reach the country's young voters. It's a platform that's become the country's second most used source of information on politics after television, according to a pollster. But one that experts say also comes with plenty of issues. Have a look at this.
These Indonesian women are trying to promote presidential candidate Prabowo Subianto on TikTok. It's a platform all three candidates have gravitated towards as they try to reach the country's millions of young voters ahead of the February 14th election. TikTok has 125 million users in Indonesia and has become the country's second most used source of information on politics after television, according to pollster Indicator Politik Indonesia. Fazan Habib is a social media campaigner for Subianto.
The cute dance is quite viral because it was introduced and even done by Mr. Prabowo himself. And it turns out that the public loves it. As it seems nowadays, people prefer a happy campaign model, which includes dancing.
Subianto's rivals, Anies Baswedan and Ganjar Pranowo, have also ramped up their presence on the app, answering questions during live streams or sharing videos of heartfelt encounters with voters. But experts say TikTok is also flooded with problematic content that attempts to manipulate young voters. Enda Truastuti is a communications researcher at the University of Indonesia. She says many young voters may not be aware that Subianto has been forced to deny allegations of human rights abuses during his time as Special Forces commander.
Youth who are targets of this rebranding do not have a grasp of the historical and political context within Prabowo's political ecosystem. This is consistent with narratives on TikTok, such as, if he did violate human rights, why was he never jailed?
Manipulated images and deepfake videos of the candidates have also circulated widely. TikTok says on its website its policy is to remove harmful misinformation and work with fact-checkers to flag or debunk it. Political ads and fundraising are banned. Nearly 205 million people are registered to vote as the world's third largest democracy heads to the polls on Wednesday.
Now on to markets. The Nasdaq slipped on Monday afternoon after briefly surpassing its record closing high from November 2021, while the Dow rose modestly ahead of two U.S. inflation reports this week that could potentially influence Federal Reserve policy. Here's a quick recap of markets.
Stocks finished mixed Monday ahead of two U.S. inflation reports this week that could influence Federal Reserve policy. The Dow rose 1/3%, while the Nasdaq climbed to within a percentage point of its all-time high but finished down 0.3, and the S&P 500 fell 0.1. Energy stocks were the top performer in the benchmark index, while most of the so-called Magnificent Seven mega-cap technology stocks fell, which caught the attention of Janney Montgomery Scott chief investment strategist Mark Lucchini.
It's a day in which we're either seeing some rotation, which I think would be healthy for the market, or perhaps just some cooling of heels relative to the outperformance that was led by tech and communication comm services on a year-to-date basis in terms of their weaker relative performance today.
During the session, Nvidia crossed above Amazon.com in market capitalization as the euphoria around AI catapulted the chipmaker to the fourth most valuable U.S. company. Nvidia ended the day up while Amazon dropped. Meanwhile, traders await January's Consumer Price Index and Producer Price Index this week to gauge prospects for interest rate cuts. The odds for at least a 25 basis point rate reduction in May have dropped to 57% from over 95% at the start of 2024, as per the CME FedWatch tool. Other stocks of note included Diamondback Energy, which jumped 9% after announcing a $26 billion deal to buy the largest privately held oil and gas producer in the Permian Basin, Endeavor Energy Partners.
Now let's talk about inflation. The U.S. Consumer Price Index report was just released moments ago, and it seems like the CPI increased more than expected in January. This is amid rises in the cost of shelter and healthcare. But the pickup in inflation likely does not change expectations that the Federal Reserve will start cutting interest rates in the first half of this year. The CPI increased 0.3% last month. Now, this is higher than the number in December, according to the Labor Department's new statistics released today. In the 12 months through January, the CPI increased 3.1%. Now, this is lower compared to December in a year-over-year basis, although this is higher than what economists had predicted. Meanwhile, Yemen's Iran-aligned Houthis fired 2 missiles on Monday at an Iran-bound freighter in the Red Sea. And this is marking the first time they have targeted a vessel connected to the country. And of course, this is adding to further concern over attacks that have roiled global shipping. Here are the details.
Yemen's Houthi militants have hit another cargo ship in the Red Sea, and this time there is a puzzle about their choice of target. A Houthi spokesman said Monday that the bulk carrier MV Star Iris was American-owned, but public data show it is actually Greek-owned and was bound for Iran with a cargo of corn. Since Iran is seen as the Houthis' main backer, that was a surprise. Previously, the Houthis have said they were targeting vessels linked to Israel or backers like the US and UK. They say that's in solidarity with Hamas militants over the conflict in Gaza. Now, some think the new attack could be meant to show that they are not beholden to Iran after all. There was no comment on the strike or that suggestion from Tehran. Others have said the choice of target could simply have been a mistake over the vessel's ownership. The attacks have roiled global commerce, with many freighters forced to take safer but much longer routes. This week saw dramatic evidence of the impact, with thousands of animals disembarking in Australia after 6 weeks stuck at sea. A cargo ship carrying 14,000 sheep and 2,000 cattle was ordered back to port after being unable to proceed through the Red Sea. That's just the latest sign that the attacks are delaying or halting the delivery of goods to global markets.
The risk of real estate loans is putting increasing pressure on regional banks, and investors are taking notice of this. Portfolios dominated with offices and multifamily property loans are particularly under scrutiny. This was partially triggered by New York Community Bank Corp's 60% share dive tied to its commercial real estate portfolio. Now, delinquency rates on commercial mortgage-backed securities and commercial multifamily housing are expected to rise this year. Of course, this is amid higher interest rates and with empty offices. Now, a Bank of America executive has an optimistic outlook instead on the market, saying that she does not see anything that could cause systemic issues in the sector like a crash or a recession, but is still concerned. Nvidia is building a new business unit focused on designing custom chips for cloud computing firms and other projects as well. This is according to sources familiar with the company's plans. Here's what you need to know about that.
Nvidia is building a new business unit focused on designing custom chips, including advanced artificial intelligence processors for cloud computing firms and others. 9 sources who spoke with Reuters said the dominant global designer and supplier of AI chips wants to move into an area with tremendous growth and protect itself as companies are searching for alternatives to its products. Nvidia currently controls about 80% of the market for high-end AI chips, a position that has sent its market value up 40% so far this year to more than $1.7 trillion, after it more than tripled in 2023. The company's customers, including ChatGPT creator OpenAI, Microsoft, Google, and Meta platforms, have raced to snap up the dwindling supply of Nvidia's AI chips, while they try to develop their own chips for specific needs. Nvidia is trying to help them and gain a foothold in a $30 billion market, putting it into competition with Broadcom and Marvell Technology. Shares of Marvell were down 3% in late morning trading, while Broadcom was up fractionally. Nvidia added nearly 3%. In 2022, Nvidia said it would let third-party customers integrate some of its proprietary network technology with their own chips, and the company refused to comment beyond that to Reuters.
And Microsoft-backed OpenAI hit the $2 billion revenue milestone in December. This is according to the Financial Times. Take a look at this.
Revenue at OpenAI has passed the $2 billion mark. That is according to a report by the Financial Times. It cites 2 people familiar with the startup's finances. There was no comment from the ChatGPT maker or from Microsoft, its big backer. The report says OpenAI believes it can double that number in 2025. It's reportedly seeing strong interest from business customers who want to use its applications in the workplace. The San Francisco-based outfit has been valued at over $80 billion. Boss Sam Altman is now said to be in talks with investors, including the UAE, over an initiative to boost the supply of chips for AI products. The Wall Street Journal says the project could require raising as much as $7 trillion. Altman is said to be pitching it as a partnership between OpenAI, investors, chip makers, and power providers.
Yet another massive deal emerging in the energy sector with the potential to create a $50 billion southwestern energy giant. U.S. oil producer Diamondback Energy has announced that it's going to buy the privately held Endeavor Energy Partners for $26 billion. Now, the combined company would pump 816,000 barrels of oil and gas per day in the West Texas and New Mexico basin, just below what Exxon, Pioneer, and Chevron pump. A rapid wave of consolidation has taken place in top U.S. shale oil fields as companies try to boost production and secure the future of drilling. Diamondback expects to finalize the deal by the end of the year, with shareholders owning about 60% of the company and Endeavor owning the rest. And from how Facebook plans to help you spot AI images to why bots could make economists obsolete, here's a roundup of some of the top stories from the AI revolution.
Facebook parent Meta Platform says it will start detecting and labeling images generated by other companies' AI services. It already labels such products when produced by its own tools. The company says labeling AI-generated audio and video content will be tougher to do. Revenue beat forecasts at Amazon over the latest quarter, partly thanks to AI. The tech is being incorporated in more and more of its products. Chief Executive Andy Jassy says the AI effect is small now, but will drive tens of billions of dollars in sales over the next few years. Nvidia shares hit yet another record high after Goldman Sachs raised its outlook for the AI chip champion. The stock is already up close to 40% this year, but analysts say it can still go higher. Goldman pointed to signs that Nvidia clients like Microsoft are starting to make real money off the technology. Huawei is seeing demand for its chips soar too, so much that it's leaving the Chinese firm with a problem. Reuters sources say it's had to cap the supply of silicon for its flagship smartphones as it races to meet demand for AI chips. Both types come from the same facility, and it just can't make enough. And AI could be better at economics than economists. The European Central Bank says its new machine learning model shows inflation may fall faster than the bank itself expects. It's the first time the bank has commented on the system, which uses around 60 variables to capture changes in the economy.
Now, with Valentine's Day being tomorrow, let's talk about a major chocolate company and how they're doing. Hershey outlined a new 2-year restructuring program involving job cuts, and it projected annual sales and profits that are below Wall Street expectations. Have a look at this.
Shares of Hershey jumped as much as nearly 8% Thursday morning after the confectionery giant announced a new 2-year restructuring program that it said would generate about $300 million in pre-tax savings. The stock initially fell in the pre-market after the candy maker forecast sales and profit for this year that was below Wall Street expectations. But shares reversed course after the market opened as Hershey outlined the restructuring plan, which it said will impact less than 5% of the company's workforce. Hershey said sales in the fourth quarter of 2023 missed estimates as inflation-weary consumers cut back spending on the company's expensive chocolates and candies. Cadbury chocolate maker Mondelez International also posted a drop in volumes for the fourth quarter as price hikes deterred customers from spending on its products. One analyst told Reuters consumers are spending less during non-seasonal periods. Hershey CEO Michelle Buck said the company expects higher cocoa prices to limit its earnings growth in 2024.
The Super Bowl is behind us, but did you know betting on the event has reached billions of dollars? Now, the NFL has a different opinion of sports gambling these days compared to its older traditional anti-gambling stance. These days, they're betting that teaming up with sports betting companies will make a profit. NTD's Sean Marshall has some information on what caused the big change in position.
21 years ago, the National Football League would not allow Super Bowl ads from the Las Vegas Convention and Visitors Authority. The NFL didn't want even the tiniest example of being connected to gambling. Although fans have been making bets on football since it was a semi-pro sport a century ago, when it was getting far less attention than horse racing or boxing. Sports betting has been a part of Nevada for decades, but had been illegal everywhere else until a Supreme Court decision in 2018 gave every state the chance to legalize it. The NFL can point to the 2018 court decision to explain its embrace of the sector it once publicly shunned.
In the first ever Super Bowl in Las Vegas, Taylor Swift was all of us, screaming, cheering.
Despite moving its big game to Vegas and partnering up with the companies focused on sports gambling, the NFL is still trying to keep the appearance of some distance between the sport and gaming. Players can be fined or even suspended if they place a bet at one of the Nevada's many casinos, or if they bet on league games, which was the case in June 2023. Yet the change in the league's relationship with sports gambling couldn't be more obvious. Betting sites Caesars, FanDuel, and DraftKings are official partners and have agreements with the league just like Bud Light and other sponsors in that they can use the NFL logo in advertisements. And Caesars Entertainment is the official casino sponsor of the NFL. The NFL doesn't get a cut of the amount wagered with these companies. But the NFL and its television rights holders, which pay the NFL more than $13 billion a year to broadcast games, have seen a huge boost from advertising by the legal gambling industry. Gambling companies spent an estimated $508 million last year on television ads, according to Media Radar, which tracks and estimates ad spending. That amount is not far behind the $685 million that beer companies spend on television ads. Andrew Zimbalist, economics professor at Smith College and a leading expert on the economics of sports, said, "Sports has long been a way of bringing people together. Even fans of opposing teams can argue about sports without it becoming as contentious as other issues splitting society today, such as politics or the Middle East war. That's one of sports' greatest values, but I'm concerned that gambling is going to undo that." Sean Marshall, NTD News.
And finally, the Lunar New Year holiday has begun, and that means goodbye, rabbit, and hello, dragon, as the powerful mythical beast takes center stage. Millions around the world are taking part in some colorful celebrations. Here's the story.
They fly high in the Harry Potter films. They're all fired up in Game of Thrones. And now dragons are hot stuff in New York's Chinatown as the curtain rises on the year of the dragon.
This is the dragon. Kind of wild looking this year.
Chinatown advocate and food writer Grace Young knows all about Lunar New Year lore.
The year of the dragon is the most powerful Lunar New Year. In old times, the dragon was the symbol of the emperor because the dragon symbolizes power, strength, and wisdom. This is a very lucky year. Those people born in the year of the dragon are born leaders.
Sadly, the past few years have been anything but lucky for Chinatowns around the world. Restaurants suffered during COVID, along with shops like Wing On Wah, the oldest operating store in Manhattan's Chinatown.
We have this really amazing dragon teapot.
Wing On Wah is getting into the fiery festivities. A ceramic exhibit is on display featuring all sorts of distinguished dragons. Dragon and lion dancers will soon be out in full force, blessing Chinatown's businesses during the New Year parades. Just one of many long-standing community traditions this time of year, including plenty of New Year's do's and don'ts.
You shouldn't wash your hair because it will wash away your good luck. Nobody vacuums or sweeps on the first day of the new year because you'll sweep away your good luck.
And what food you eat has symbolic importance too.
The lobster is called the dragon of the sea, and so it is the most important dish to eat for the year of the dragon. It represents strength, power, energy, and good fortune.
Here's hoping the year of the dragon is both a prosperous and a delicious one. And as they say on the streets of Chinatown,
新年快乐，恭喜发财，
恭喜發財，新年好，
新年快樂，恭喜發財。
and we'll say it here too, Happy Lunar New Year.
And thank you very much for watching today. I'm Don Ma. I'll see you next time.